Welcome back to Niaga AWANI. We'll start with international news. The stiff prison sentences handed down to the masterminds behind Singapore's biggest stock market manipulation is a clear testament on the authorities' resolve in acting against such misconduct. At the same time, it will safeguarding the island nation's reputation as an international financial centre.
This was stated in a joint statement issued by the Attorney General's Chambers, Singapore Police Force and Monetary Authority of Singapore in relation to the sentencing of Malaysian businessman Soh Chi Wan and co-conspirator Chua Su Ling by the Republic's High Court on Wednesday to a total of 36 and 20 years imprisonment respectively. Both were found to have, among other things, orchestrated an elaborate scheme to manipulate the shares of Blue Man Group Limited, Asia Suns Capital Limited and Lion Gold Corporate Limited between August 2012 and October 2013 and cheated two financial institutions. Chief Prosecutor Tan Kiat Peng said they will not tolerate any attempts to subvert their criminal justice system. They will continue to work closely with their law enforcement agencies and regulators to safeguard Singapore's reputation as an international financial centre. Earlier this year, on May 5th, Soh and Chua were convicted of a total of 180 and 169 charges respectively after trial. The Higher Court found the duo guilty of charges relating to market manipulation and price manipulation, engaging in deceptive practices against financial institutions and cheating two financial institutions. In addition, Soh was found guilty of witness tampering charges and charges for being concerned in the management of three companies whilst being an undischarged bankrupt. Meanwhile, Director of Commercial Affairs Department (CAD) of SPF, David Chew, said the department took a serious view of criminals who manipulate the stock market as their conduct undermines the integrity of Singapore's capital markets. The joint statement also noted that Soh and Chua each indicated that they will be filing a notice of appeal against the conviction and the sentence imposed, save that Soh will not be appealing against the conviction for the charges under Section 148 of the Companies Act.
Wall Street's main indexes closed lower on Wednesday as investors grapple with mixed economic data, rising COVID cases in China and geopolitical tensions heading into 2023. December is typically a strong month for equities, with a rally in the week between Christmas and New Year's. The S&P 500 index has posted only 18 Decembers with losses since 1950, Truist Advisory Services data show. All 11 of the S&P 500 sector indexes fell on Wednesday, with energy stocks as the biggest loser, while recent data pointing to an easing in inflationary pressures has bolstered hopes of smaller interest rate hikes by the Federal Reserve. A tight labour market and resilient American economy have spurred worries that rates could stay higher for longer. Markets are now pricing in 69% odds of a 25 basis point rate hike at the US Central Bank's February meeting and see rates peaking at 4.94% in the first half of the next year. On a separate news, oil prices settled lower on Wednesday as traders raised concerns over a surge in COVID-19 cases in China, the world's top oil importer, against the chances easing pandemic restrictions in the country will boost fuel demand. Brent crude futures fell $1.07 or 1.3% to settle at $83.26 a barrel, while US West Texas Intermediate crude futures settled at $78.96 per barrel, down 57 cents or 0.7%. China has said it will stop requiring inbound travellers to quarantine from January 8th, a major step towards relaxing stringent curbs on its borders. However, Chinese hospitals have been under intense pressure due to a surge in COVID infections. All markets were also buffeted by expectations of another interest rate hike in the United States as the US Federal Reserve tries to limit price rises in a tight labour market. Market participants noted that trading volumes this week are expected to be lighter than usual as the end of the year approaches, creating more volatility in oil prices. Turkish President Tayyip Erdogan eliminated the retirement age requirement on Wednesday in a move that allows more than 2 million workers to retire immediately, less than 6 months before an election. The presidential announcement came during a Wednesday news conference on the popular policy move. Erdogan's ruling AK party delivered a hefty hike to the minimum wage last week as part of campaign to win back support eroded by inflation, a fall in the lira, and a sharp drop in living standards. In 2 decades in power, Erdogan has overseen a crackdown on dissent and in recent years adopted unorthodox economic policies that helped push the lira down to 1/10 of its value against the dollar a decade ago. And now this is Malaysia Daybreak by CGS CIMB. Among news of the day is a retabling of budget 2023 is scheduled on 24th February next year. And next up is Duo Pharma Biotech gets nod for halal certified cancer treatment. Next one is ATA IMS flags impairment risk and capacity cut on Dyson contract termination. Next one is Cypark sets private placement price at 38 cents to raise 68 million ringgit. Next one is Berjaya Corporation acquires land in Yokohama for 499 million ringgit. All right, now let's focus on global economic news. A surge in holiday bookings shows China's population is ready for travel as the country dismantles border controls and emerges from nearly 3 years of self-imposed isolation. After the announcement that travellers won't be subject to quarantine from 8 January onwards, bookings for outbound flights from mainland China jumped 254% on Tuesday morning from the day before, according to Trip.com Group Limited data. The top 5 destinations were Singapore, with a 600% increase in bookings, followed by 400% for South Korea, Hong Kong, Japan and Thailand. China will gradually resume accepting applications for international passenger charter flights from Chinese and foreign airlines. China's Civil Aviation Authority said on Wednesday, China will also fully restore pre-pandemic flight procedures and requirements by the summer and autumn season in 2023, it added. Hong Kong will end some of its last major COVID rules, scrapping gathering limits to vaccination checks and testing for travellers, in a sweeping overhaul of policies aimed at reviving its reputation as a global financial centre. There will be no cap on the number of people who can gather in public, and the vaccine pass for entry to a raft of venues will also be scrapped starting from Thursday, 29 December, Chief Executive John Lee said Wednesday. Hong Kong private home prices dropped 3.3% in November to the lowest since August 2017, official data showed on Wednesday, as its housing market. And one of the most unaffordable in the world is set to post in the first annual drop since 2008. Meanwhile, Japan's government will make raising wages a top priority in its economic policy next year. Deputy Chief Cabinet Secretary Seiji Kihara said on Wednesday, the biggest challenge for Japan's economy is a lack of wage growth. Unless wages rise, consumption won't pick up and companies won't increase investment, Kihara said, speaking during a television program. Now let's move on to Malaysia economic news. Malaysia's total trade in November 2022 rose by 15.6% year-on-year to 238.2 billion ringgit, said the Department of Statistics Malaysia (DOSM). In its export and import statistics by state for November, the DOSM reported that exports improved by 15.6% or 17.6 billion ringgit to 130.2 billion ringgit year-on-year during the month, while imports increased by 15.6% or 14.5 billion ringgit year-on-year to 107.9 billion ringgit. The Ministry of Domestic Trade and Cost of Living and the Ministry of Economy are refining several quick wins to tackle the cost of living issue by January next year. Domestic Trade and Cost of Living Minister Datuk Sri Salahuddin Ayub and Economy Minister Muhammad Rafizi Ramli said in a joint statement on Tuesday that it will include a cross-ministry cooperation action plan, and several procedures to implement policies are being updated and expected to be implemented at the end of January next year. A total of 1.3 million civil servants who are in grade 56 and below will receive a one-off special financial assistance of RM700 on 17 January next year as a token of appreciation for their contributions in public service delivery throughout the year. About 1 million retired civil servants will receive RM350 on the same day. A new surcharge on electricity tariff will be imposed on non-domestic electricity users at Kulim High Tech Park or KHTP and selected non-domestic users in Sabah and Labuan for first half of next year, the Energy Commission said. And however, domestic users across the three locations are exempt from the surcharge. And similarly, for micro, small and medium enterprises in Sabah and Labuan, the EC said. Alright, that is all for today's Niaga AWANI. Be sure to tune in to us every weekday, Monday to Friday, 9 a.m. Only on Astro channel 501. Thank you for watching.